Okay, let's get right into it. When you see a headline about Microsoft investing billions in Japan, it's easy to get fixated on the number. But for an investor, that's just noise. The real story, the thing that actually matters, is whether Microsoft's pricing power has fundamentally changed because of this. See, for a company the size of Microsoft, real value doesn't come from another news headline. It comes from locking in higher quality, more defensible profits. So what we're going to do here is answer just 3 questions. First, is data sovereignty becoming Microsoft's new form of pricing power? Second, does that pricing power actually translate into higher quality, more resilient profit? And third, does that profit quality end up deepening Microsoft's competitive moat? So let's start with that first question, because honestly, everything else is built on top of this. Is Microsoft managing to turn what looks like a constraint, data sovereignty, into a real source of pricing power? To get this, you have to realize we're talking about 2 completely different games. In the standard cloud market, it's a slugfest. Everyone's competing on price, on performance, on features. It's a race to the bottom, a race toward becoming a commodity. But a high-regulation market like Japan, that is a whole different ballgame. The rules of competition shift completely from who's cheaper and faster to who can I trust with control and compliance. And this really gets to the heart of it. Think about who the customers are here. Government agencies, major banks. What are they really buying? It's not the lowest price. They're buying peace of mind. For them, the most expensive thing isn't a cloud bill. It's a massive compliance failure or a data leak. So when the entire reason for buying changes from cost to trust, the game is no longer a price war. It's a competition based on who offers the most security and control. And here's the brilliant part. This rule that says all data has to stay inside Japan, it looks like a restriction, right? But it's actually a filter. It creates this huge barrier to entry that almost no one else can meet at that scale. It just wipes most of the competition off the board. And that scarcity, that gives Microsoft enormous bargaining power. Suddenly, they aren't just selling a generic cloud service anymore. They're selling critical infrastructure that comes bundled with trust and control. And that is a much, much more valuable thing to sell. Okay, so let's say we agree. Microsoft has secured this new pricing power. That brings us to the second big question. Does this power actually turn into higher quality profit? Because not all profit is created equal. This is about more than just being able to charge a bit more. It's about changing the fundamental nature of the revenue you're bringing in. By playing in this high regulation space, the business is just way less vulnerable to the price wars and commoditization you see everywhere else. The money they earn becomes stickier, more predictable, frankly, just a whole lot more resilient. And here's how that super resilient profit gets built. It's a journey. You start by winning the deal just because you check the compliance box. But then your services get woven into the client's core operations, into their workflows, their security rules. You become the default, the system their teams are trained on. And eventually you reach this point of complete integration where it becomes incredibly painful and expensive for them to even think about switching. That is the ultimate customer lock-in. And that lock-in is way more valuable than a one-time price bump because it guarantees a predictable, high-margin revenue stream for years and years. And what does that lock-in get you? Well, it gets you what you could call a sovereignty premium. Just look at this. Projections are suggesting Azure's operating margin in Japan could hit 72%. That's a huge step up from the global average. For a giant like Microsoft, finding a new layer of higher quality profit inside its main business, that's the holy grail. So the pricing power isn't the end goal. It's the tool you use to create this deep lock-in, which directly boosts the quality of your core profits. All right, let's bring it all home with the final question. We've got pricing power leading to better profits. So how does this all come together to strengthen Microsoft's long-term competitive moat? The really smart part of this whole thing is that it's not about winning individual orders. It's about capturing a strategic position. An order is just a transaction. It's temporary. A position, on the other hand, is structural. It means you are now a fundamental part of the system itself, giving you control and influence for years to come. This chart makes the difference really clear. A technology moat, having the best product, it's great, but it's also vulnerable. Someone can always come along with the next big thing and leapfrog you. But a systemic moat that's built on trust, compliance, and being deeply embedded in regulations and habits. By becoming one of only 5 certified government cloud vendors in Japan, Microsoft is building that systemic moat. This kind of fortress is just so much more durable. A competitor can't just break in with better tech. They'd have to untangle this whole complex web of rules, relationships, and trust. Good luck with that. So as we wrap this up, forget the investment size. Forget a small bump in sales.
The only checklist an investor really needs is right here. Did data sovereignty become Microsoft's new pricing power? Did that pricing power turn into higher quality locked-in profit? And did that profit quality go on to deepen Microsoft's systemic moat?
Because if the answer to all three of those is yes, then this story isn't about expansion at all. It's about something way more fundamental. It's a signal that the very foundation of Microsoft's intrinsic value is getting stronger, more resilient, and a whole lot more defensible for the future.
And just as a final note, remember, this content is for informational purposes only. It isn't financial or investment advice. The views we've talked about are for analysis and are not a recommendation to buy or sell anything.